Hey everyone! Welcome back to our channel. Today, we've got a hot topic to discuss: the potential crash of the US dollar and how the United States is responding by developing a new digital currency called the Central Bank Digital Currency, or CBDC for short. We'll also dive into the FedNow Service and the implications of this new digital currency on citizens' freedoms. So, let's jump right in. First things first, what is a central bank digital currency? A CBDC is essentially a digital form of a country's national currency, issued and controlled by its central bank. Unlike cryptocurrencies such as Bitcoin, CBDCs are centralized and regulated, providing a stable and secure alternative to traditional currencies. Why the US is considering a CBDC? The potential crash of the US dollar has prompted the United States to explore the possibility of implementing a CBDC. There are several reasons why the US is considering this move. Maintain monetary stability. A digital currency would allow the Federal Reserve to better control the money supply and interest rates, ensuring the stability of the nation's currency. Enhance financial inclusion. CBDCs could potentially provide access to financial services for unbanked or underbanked populations. Increase efficiency and security. CBDCs can reduce transaction costs and increase the speed of transactions, while also enhancing the security of the financial system through advanced technology. Compete with other countries. As countries like China and Sweden are already exploring their own CBDCs, the US may want to stay competitive in the global financial landscape. Pros and cons of CBDCs. Now that we know what a CBDC is and why the US is considering it, let's take a look at the pros and cons of implementing a digital currency. Pros: faster and cheaper transactions. CBDCs can facilitate instant transactions, reducing costs and increasing efficiency for businesses and consumers. Increased financial inclusion. CBDCs have the potential to bring banking services to unbanked and underbanked populations, increasing financial inclusion. Enhanced monetary policy. CBDCs could provide central banks with more effective tools for managing inflation, interest rates, and money supply. Reduced risk of bank runs. With a digital currency, people may be less likely to withdraw their money from banks during times of crisis, reducing the risk of bank runs. Cons: privacy concerns. The centralized nature of CBDCs may raise concerns about surveillance and potential government control over citizens' financial activities. Impact on traditional banks. CBDCs could disrupt the banking system, as people may choose to hold their digital currency with the central bank, potentially undermining the role of commercial banks. Technological risks. The implementation of CBDCs would require advanced technology, which could be vulnerable to cyber attacks or technological failures. Unequal access to technology. Not everyone has access to digital devices or the internet, which could create a digital divide in accessing and using CBDCs. The FedNow Service. Now let's talk about the FedNow Service and its relation to CBDCs. The FedNow Service is a real-time payment and settlement service that the Federal Reserve is currently developing. It's designed to enable financial institutions to provide their customers with instantaneous payment services, 24/7. This service aims to increase the speed and efficiency of the U.S. payment system, allowing for seamless, real-time transactions between banks and individuals. So, how does the FedNow Service relate to CBDCs? While the FedNow Service itself isn't a digital currency, it could serve as the backbone for the infrastructure needed to implement a CBDC. By facilitating real-time transactions, the FedNow Service could pave the way for the adoption of a digital US dollar, ensuring that the necessary infrastructure is in place for a seamless transition. Implications on citizens' freedoms. Finally, let's discuss the implications of CBDCs on citizens' freedoms. The adoption of a digital currency could have both positive and negative effects on individual liberties. On the one hand, CBDCs could increase financial freedom for those who have been historically underserved by traditional banking systems. By providing access to essential financial services, a CBDC could empower individuals and small businesses, promoting economic growth and opportunity. On the other hand, there are potential downsides to consider. The centralization of a digital currency could lead to increased government surveillance and control over financial transactions. This could raise privacy concerns and potentially restrict individual freedoms if governments were to misuse this control. Additionally, the reliance on digital technology could lead to a digital divide, with some individuals being left behind due to a lack of access to the necessary devices or internet connectivity. What to watch for in the future? As we look towards the future of digital currencies and the potential implementation of a US CBDC, there are several key factors to keep an eye on. Global trends. As more countries explore the possibility of launching their own CBDCs, the US will likely continue to monitor these developments to ensure that it remains competitive in the global financial landscape. Technological advancements. Breakthroughs in digital technology could influence the feasibility and potential benefits of a CBDC. Keep an eye on advancements in blockchain, digital identity solutions, and cybersecurity measures that could shape the future of digital currencies. Policy discussions. As the conversation around CBDCs and their impact on society evolves, it's important to stay informed about the policy decisions that could affect their implementation, regulation, and potential consequences for citizens' freedoms. Public opinion. The adoption of a CBDC would likely require widespread public support. Keep an eye on how the conversation around digital currencies unfolds in the public sphere, as this could ultimately influence the direction that the US takes in terms of CBDC development. Final thoughts. The potential implementation of a US central bank digital currency is a fascinating and rapidly evolving topic. As we continue to monitor developments and discuss the implications of CBDCs on various aspects of our lives, it's crucial to stay informed and engaged in the conversation. Remember that the future of money is ultimately shaped by the decisions we make as a society, and your voice matters. So, whether you're in favor of CBDCs, concerned about their potential drawbacks, or just curious to learn more, we encourage you to join the discussion and contribute your thoughts on this important subject. In conclusion, the development of a central bank digital currency in response to the potential crash of the US dollar is a complex and multifaceted issue. While CBDCs offer several advantages, such as increased financial inclusion, faster transactions, and enhanced monetary policy, there are also potential downsides to consider, such as privacy concerns and the impact on traditional banks. The FedNow Service, while not a digital currency itself, could serve as the foundation for the infrastructure needed to support a CBDC in the United States. The implications of a digital currency on citizens' freedoms are still a topic of debate, with both potential benefits and drawbacks to consider. As the United States continues to explore the possibility of a CBDC, it's essential to carefully weigh the pros and cons and consider the impact on individual liberties. As always, we'll keep you updated on any developments regarding the future of money and digital currencies. Thanks for joining us today. If you found this discussion helpful, please give us a thumbs up and subscribe to our channel for more informative content. Don't forget to leave your thoughts and questions in the comments section below. See you in the next video.